Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so the last video that I put out on Plug came out in the pre-market on January 23rd, and that was following the day, the 22nd, Monday, when we had what looked like a reversal doji that I was expecting there to be a slight pullback. It closed on that day at a price of $2.84, marked by this yellow line here, which in my view has historical significance. But then what we saw on that Tuesday was actually a gap up, going up nearly 31% on the day, actually 30.99% on the day. Extremely strong. Look at this volume down here, just an incredible day. And so following that, what we've seen is some consolidation that I feel is the formation of a bull flag. So I do expect this to continue to the upside. However, I do want to highlight some levels to pay attention to in case it breaks to the downside and this ends up being bearish consolidation, because, it is quite possible. To start on the day today, January 30th, which was a Tuesday, Plug closed at a price of $3.73, being down just a little bit in the after hours. It does look like we have been consolidating nicely between these two levels, between $3.40, which was the lowest close over the past, 6 trading days. And so I think that $3.40 is going to be a key level to hold above. As long as we don't see any closes below $3.40, I do think this consolidation is bullish, and I do think it will be breaking to the upside. And then as far as that break to the upside goes, we have seen a few wicks up here, but we have not seen any real closes above the tops of those wicks. The highest close that we saw over here was yesterday, January 29th, with a close at $3.79. But really, what we want to see is a close above the high from January 24th, which was at a price of $4.03, marked by this white line here. So if we can get a close above that, I think that is a sign that this is breaking out to the upside. So we will want to be paying attention to that. The candle from today, January 30th, does look like it is maybe getting rejected from the close of yesterday at $3.79, so could not break above that. So that does suggest there could be a little bit of a pullback, but like I thought there'd be a pullback here, we saw a gap up. Maybe this is getting ready to gap up to start trading above $4.03, so that is something to keep in mind. But if we are not able to hold above or close above $4.03, that could be the sign of a double top. And so that could be very bearish. So if we are getting up to around $4, keep an eye out for strength and make sure that we are closing above this level of $4.03, consolidating above there. Otherwise, there could be a pullback if we do put in a double top. And then as far as the downside goes, I did mention there was a gap to the upside, and filling that gap would be going down to a price of $3.07. However, the close on the day prior to that gap being formed was at $2.84, this yellow line. And so that would be a more proper gap fill. So I do think that those are levels to be paying attention to. And then just below that in the last video, I had mentioned $2.68 being a gap there. The low on Monday, January 22nd, was $2.70. There is a tiny gap there, but I do suspect it will be a while before that gap is filled. And then so one other thing that I do want to throw up on the chart that I do think will provide some good guidance is a Fibonacci retracement. So going from the high here of $4.99 down to the low of, let's see, $2.26.3. And from that retracement, we can see a few levels that I do think are going to be pretty key. And so the first level that I see is the 236, which is at a price of $2.90.7. So that is right around these gap fill levels. So I do think that is a level to be paying attention to. It's possible if this consolidation breaks to the downside, it's possible that level could be revisited. The next level up is the 382, and that is at a price of $3.30.5. And so I think that, while there is this level at $3.40, I think that if we do see a close below $3.30.5, I do think that could be a really bearish sign that we would be testing these lower levels. But it is possible we could see a wick down to that level. So if we see wicks down to $3.40 or $3.30.5, those could be great adding opportunities. But if we do see a close below them, brace for the downside. Then the next level is the 50% retracement, which is $3.62.7. That is right around the current price. And it does seem like that could be acting as support before the next leg up. So keep that in mind. And then another level to keep in mind for a breakout signal is the 618, and that is at a price of $3.94.8. So really just in this like $4 range here. If we do get a close above $3.95 to $4.03, that could be a sign that this is going to be breaking out to the upside. However, you always want to make sure there is confirmation because it could be a fake out. So you really want to be seeing two closes above these levels before we could expect to see continuation higher, like to the 786 at $4.40.6, or coming back up to $4.99, or, right around $5. So I do think that the upside is in Plug's future, but we also want to be keeping a lookout for possible breaks to the downside. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.